Hey everyone, this is Arcadia Trading, and I'm going to be giving you guys a couple of tips and tricks for support and resistance, and a couple of things that I will be looking at tomorrow, and also what happened today. All right, so we're looking at QQQ at the 15-minute time frame right now. And yesterday I talked about in my video where if we do break this triple top resistance around 294.33, we'll likely get a nice bull move up. And that's essentially what happened. We got CPI data here, right at this. You can see this weird looking wick, bottom wick, top wick candle, where CPI came in pretty much aligned, except the core inflation came in 0.1% hotter than expected. So I'm guessing that is why the algos sold off here. Get that bottom wick in, and market was like, they didn't really care because if we didn't get anything too, as long as we didn't get anything too hot, we're very likely getting a 0.5%, sorry, 0.25% basis point hike in the 22nd of March. So that's essentially what happened. The market was happy enough with what we got, and we broke the resistance here, this quadruple top now, even with the pre-market test, and we had a nice bull move up. We hit 297.95, and you can see that is the resistance that was already previously drawn over here. So that's this area, this top as well, and even this area as well. And then this was the support, and then later it became resistance, 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 and it's still now the resistance again. So when support turns with resistance, that's what we have to watch for. And tech was leading all morning, and the SPY was still weaker than tech, which is a good sign. We want to see tech lead when we have a bull move, but the financial sector kept dragging down the moves. There was no red flag at this area. We're still in a 15-minute bull flag right at this choppy range. The red flag started to come in right when we broke this and this 12 EMA, which is the teal looking line, at the same time, and that's where the bear volume came in. And you can see this very notable drop. We tried to bounce. We tried to make this support where it was previously a resistance. We bounced decently here. Now this would have been like a large bounce. Let's see. Yeah, it's like a 0.5% bounce in just 30 minutes. Like on a regular day, back when there's no volatility, 0.5% would have been like a whole day move. But yeah, so we got that bounce, and let's see, couldn't get back over the 12 EMA. Bears took over, broke that support. There was zero follow through from the bears. Essentially, that's what happens when you break a strong support and we revert back up really quickly. That means there's no follow through from the bears. And once the bear sees that there's no more ammos for them anymore, quickly they covered their shorts, and as well as the bulls, probably bought shares as well. So you can see this huge move within, yeah, 1.4% within 1, 2, 3 candles. So that would have been like a 45-minute move for 1.4%. And essentially today, if you were trading both sides, you would have insane amount of opportunities. 1.2% up, another 1.4% down, another 1.4% up. So bulls and bears both made money today. And right now, what I'm looking at tomorrow would be the PPI data. And it's very likely it's going to come in expected, since the CPI came in pretty expected. You wouldn't expect like an insane hot PPI data because CPI is not that hot. And you also wouldn't expect something that's really cool as well. So technicals will be matter more tomorrow than the PPI data. If we get something aligned, and we'll just have to see how the market technical works. So right now we are in this choppy range. So within this resistance and support. And the only thing I'll be looking at would be the financial sector again, because the financial sector, this is the regional bank for financial regionals ETF. You can see that we had a decent bounce this morning, all the way from yesterday's close. That was a 10% bounce, and we hit the 0.382 Fibonacci retracement, and we dropped from there. That's a little bit of a red flag because if you're under the 0.382, this could still be a daily bear flag. Daily bear flag means that it'll just go like this, and then it chops in this range. And if it's a confirmed day flag, sorry, if it's confirmed daily bear flag, then we have another drop down. And so far, we need more information. But if we do chop in this range for a while, then there's a chance that we'll get our daily bear flag. The more important sector would be the financial, even more important than the regional, because the financial are the bigger ones where you have big banks like JP Morgan's are holding in those holdings. Is also in a bear flag territory as well. So you can see this A to B move. So this top move A, and this is the bottom of the move B. So from this A to B move, we bounced. We're still within the 0.8382 range. So we don't get over this 0.382 range, the probability of a bear flag increases just dramatically. So if we, bounce here, chop here, and then just chop around, again, that bear flag could very likely have another leg down. And as with all price actions, we don't know what's going to happen. We can only trade within the probabilities of the most likely scenario that will happen with the information given to us. So with the financial sector still in the bear flag territory, I am a little bit worried to go long on any of the positions, especially when SPY is still under the 200-day moving average. You can see back here, when QQQ hit this resistance, SPY SPX also hit that little double top resistance, but at the same time, 3940. Let me take a look here. The daily 200-day moving average, the yellow line, that would be 3939. So yeah, so 3939 is pretty much where we almost hit. Like it was like $3 away. So essentially, we did not get over the 200-day moving average today. And I would say, it wasn't like a real test because we didn't even touch it, but it was close enough where QQ and SPY hit the same resistance at the same time, and we didn't even get close to it. So what I want to see is the bulls retest that area and get above it. If SPY gets above the 200-day moving average, then I'll be a little bit more long biased. But then right now, only QQQ is above the 20-day average, moving average, but SPY is not. And the financial sector is having a bear flag. So if this bear flag plays out, SPY is not getting over the 20-day moving average because XLF is a large holding in SPY. So right now, if you're a bear, you're also a little bit uneasy as well because you don't know, because we had a bear break with no follow through on the indices. But if you're a bull, you're still under your 200-day moving average for SPY, and you still have bear flags for the financial sector. So right now we're in a situation where it's like you're 50-50 between bears and bulls. So the best thing I'm currently doing is I have full cash. I'm just been scalping daily. So I played this move this morning, and I did not short here because I was looking for a daily higher low and kind of like retest the area. So I sold my position over here, and I just waited the whole day. And after this move, I didn't get back in because it was just too choppy for me. And then this whole bounce, I missed this move as well. But I'm happy with this move I got. And essentially, I was going to short if we do break the support and then retest. So let's say we go down here, we broke it, and then we retest this area, which it did, and then we dropped back down. I was just going to short, but we didn't. So we bounced right back into this range. So once we're back in this range, there's no clear direction for me. So I'm in full cash. If we go up, then I might be a little bit more long biased because if we do break this area, SPY is likely above the 200-day moving average as well. Because you can see if you break that area, SPY will be trading around this area as well. So that's a good sign if both of those happens. And right now we'll just be looking at the PPI data tomorrow and make sure to look for the financial sector if we end up negating the bear flag or not. If we do end up popping above here into the 50% area and break above it, then that's a good sign. we're not going to get that bear flag. And it'll be more likely a equilibrium range where it chops within this range. And then the market can very likely move up with the financial sector going sideways. But if it's financial sector dragging down the sectors, if the financial sector is dragging down every other sector all the time, then very likely the QQQ isn't going to go anywhere. So we'll see how later this week plays out.